Hey everyone, John Hunter here, and today in the market psychology video, we're going to be taking a look at the S&P. Today was inventory day on crude oil, and it got a little bit choppy and nasty, so the S&P has some slightly better learning opportunities for us here to go over. So yesterday, the S&P had a very, and when I say very, I mean very range-bound day. Back and forth over and over and over again, and when they finally tried to break out, that failed too, right? So we have to put this into context. Yesterday was a super strong range day, and we're in the understanding that sellers are probably selling above the range, knowing that any breakout up isn't going to work, at least most of the time. And if it does, if it does end up working, it's probably still going to pull back so they can get out before it goes higher anyway. So yesterday's little range that formed down here, I say little, it's the biggest, range that we've seen in a while on the S&P when it comes to an entire day. But when you get a breakout like that, you're very likely going to get selling as soon as the market opened with that gap higher, because it's going to be seen as a breakout of the range, and sellers are going to assume that it's going to fail, and they're going to try to drive the market lower. So you get this beautiful candle to the downside that allows sellers to take it right back down, and guess where they found support? Right at that earlier range that we had across the top there. Not really much of a surprise. And when it bounced to the tick off of that low like that, or that high of the range rather, that gives you a really big clue into what's going on here. The buyers are likely taking over, and the sellers are saying, whoa, wait a minute, that wasn't supposed to happen. Maybe I'll hold on for a little bit and see if we can get maybe another push down into the range again, and then we can take our profit down here. Unfortunately for them, that did not happen. We had a strong bull candle, weak bull candle follow through, but when the sellers tried coming back in again, it turned into a massive bull candle closing right at its highs, and that is exactly where we want to be getting long, because if you're a seller, that's going to be where you're getting out, and that's going to cause a flood of buy orders in the opposite direction. So that's a really nice long setup going back towards the highs, but there will be some stubborn sellers that don't want to exit early. They're going to enter in short here, they're going to leave their stop above the highs, and they're just going to wait, and they're going to sit there, and they're going to sit there, and they're just going to wait. It comes back to the highs, and we get this massive blow-off candle through the highs, and that ends up in a big stop run. Anybody who didn't want to get out early, who didn't want to take the smart exit early with the information, they got slapped. Now, with that big slap, normally with a stop run, you get a big wick on one side, right? It looks something like this. Goes up, hits all those stops, and then comes right back down again. If you look at this candle, that is not what happened. This closed as a giant brick, right? No wick on the bottom, no wick on the top. That is a very strong indication that, yes, we did have a stop run, but there were so many buyers at that high, assuming that we're going to go into a bull trend, they couldn't even form a wick on the top. So that gives us a huge emphasis to become a buyer for a much larger swing, possibly for this move to double itself up and go in the opposite direction. So a beautiful reason to get in long right here. But if you didn't want to take that earliest entry, when you see the sellers fall apart like this, they get trapped in and go back in the opposite direction. That is a huge clue that the buyers definitely want this, and they have their eyes set on a big new high, and that is a good reason to jump in long. This was actually the trade of the day video, so make sure to watch that. But this big move up here, now we start forming a nice little bull channel working its way higher. They try breaking out of it, and as soon as they break out of it, we immediately close right back on our highs again. That's essentially saying that the buyers, you know what, they're not getting any pullbacks. So any pullback, even if it's below a candle low, they're going to take it. And we closed up into a very strong bull doji, and that is reason enough to get back in and look for a quick drive back towards the high. So just a beautiful, beautiful combination of a strong breakout day that didn't look like it was going to start that way. Looked like we were going to start inside of kind of a range breakout failure back into yesterday's range, but it didn't go. We had a huge trend reversal right back in the opposite direction with gorgeous follow through. And that's the importance of using market psychology along with technical analysis, because it told you the ins and outs of everything that happened today. So hopefully you found it interesting, hopefully you found it useful, and we'll see you next time.